Hello and welcome back to the FT Markets Bubble series. Today we're going to be talking about the bubble that everyone's been talking about apparently forever, London house prices. On here we've got a picture of the building. One of these flats in this building was sold for almost £150 million earlier this year, and at the moment there's a garage, no bedrooms at all, on the market for £500,000 in London. Feels very toppy, feels like a bubble. Well, to discuss that, we've got Kate Allen, the FT property correspondent. Hi, Kate.
Hi.
Let's start by bringing up the first chart, which shows just how much house prices have been going up in London. As you can see there, the biggest annual gain in prices, up 20% of any time of the past decade. Is this a bubble?
Well, what we've seen in the past 6 months is a very interesting shift. There's been a lot of talk about foreign money in the London market, particularly since the recovery from the financial crisis. Money pouring in from around the world, foreign investors wanting to be here because they see London as a safe haven for their assets. Property is a good place to hide their wealth because it's quite hard to find out ownership. But since the start of the year, we've seen the price effect spreading out to a much wider part of London, with places like Lambeth, Lewisham, some of London's more gritty boroughs, seeing much faster growing house prices. So this suggests that if it is a bubble, it's starting to take hold across a much wider area across the capital.
Yeah, so we're starting to see not just rich Greeks hiding their money from the Greek tax authorities and rich Russians keeping their money out of the country, looking for safe havens in London, but actually people like you and I seeing our house prices go up in the somewhat less salubrious bits of London. Let's move on to the next chart. We've got an interesting comparison here. This would be the argument that, in fact, there is no bubble. This is all just about supply and demand, is that right?
Yes. So this is the economic fundamentals argument which London Mayor Boris Johnson makes quite strongly, which is that for the past 30 years at least, London's population has been growing more quickly than we've been building houses. So here's 2013 as an example. More than 50,000 new households formed in London through immigration, population growth, etc. People moving into London from around the rest of the country, because London has been described as this kind of squid that's sucking the life out of the rest of the country economically because of its dominant economy. But we built fewer than 20,000 new homes to house these people. Now, the argument that Mr. Johnson and other people who support this line of reasoning would argue is that in this situation, no wonder prices are going up.
Okay, but of course that then suggests that prices can continue going up as long as this carries on. But we will, of course, reach a point where people can't form new households because there aren't any new houses for them to live in.
Yes.
I mean, we've got to wonder where these 30,000 people are actually living if there aren't any new buildings.
There's a crucial point involved in that, which is that Mark Carney, the Governor of the Bank of England, has warned, as have London business leaders, that housing is the crucial factor that could cripple the nation's economy. So if these people, these new households, can't find places to live, that could have serious implications for London's economy.
And this is because companies won't be able to get staff at a reasonable price.
Exactly.
They'll have to pay more.
They'll look to move elsewhere.
Which, of course, ought to happen. This would be a good thing, right? If we haven't got any space, rather than, it doesn't make any sense, really, for companies to insist on being in London. If we've got empty houses sitting in the northeast of England, set up the company there and we wouldn't have a problem with housing, presumably.
It would be the logical consequence of the supply-demand interaction.
And this shows us, well, whenever you see lines start to go vertical like this, it does make a warning bell ring, but this is saying that the average buyer of their first house in London is paying almost 9 times the average earnings in London. At some point, presumably, these people just will no longer be able to afford to buy houses. There will be no new buyers. Exactly.
So this demonstrates the consequence of that squeezed supply-demand relationship that we just looked at on the previous slide. So since 1983, which is when this data series begins, we can see that this affordability ratio has never been at such a high rate. And as you say, this really means that the people who can afford to buy as a first-time buyer in the London market are becoming a smaller and smaller group of people who need to have much greater economic resources in order to do so. And the question remains, how far can that go?
So basically, unless you're an investment banker or have rich parents, you've got to rely on renting.
Absolutely.
Okay, well, there we have it. Kate Allen, thank you very much.
Thank you.